Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HEALTHPEAK Properties Inc. quarterly report. HEALTHPEAK Properties Inc. offers a range of businesses and services through its fully integrated real estate investment trust, REIT. The company's primary focus is on owning, operating, and developing high-quality real estate properties that cater to the healthcare industry. This includes healthcare discovery facilities, healthcare delivery facilities. HEALTHPEAK Properties, Inc.'s stock price dropped by 15.84% over the past year due to several key events and sector challenges. The company's quarterly earnings reports were a major contributor to this decline. In February 2025, HEALTHPEAK missed EPS expectations, leading to a 1.23% drop in stock price. Although it surpassed EPS and revenue expectations in April 2025, the stock still fell by 4.2%. The second quarter earnings report also disappointed investors, with net income missing analyst estimates and diluted earnings per share guidance being lowered. A significant analyst downgrade from Deutsche Bank in August 2025 further contributed to the decline, lowering its price target for HEALTHPEAK Properties Inc. from $28 to $18. The third quarter earnings report was particularly disappointing, with a substantial EPS miss of -$1.17 against a forecast of $0.586. Broader market and sector concerns, including NIH funding cuts, reduced headcount at the FDA, and tariffs, have also impacted the company's ability to secure new deals. Additionally, HEALTHPEAK Properties' high debt-to-equity ratio has been identified as a significant financial risk, particularly in an environment of potentially rising interest rates. These factors combined have led to a decline in the company's stock price over the past year. The primary drivers of revenue growth or decline can be summarized into several key areas. On the growth side, increased occupancy rates in CCRC and former redevelopment properties, annual rent escalations, and savings from internalizing property management have contributed to revenue growth. Additionally, interest income and other has increased due to secured loans and mezzanine loans receivable. On the decline side, higher operating expenses, net of savings from internalization, and decreased adjusted NOI from dispositions have led to a decrease in revenue. Other factors contributing to revenue decline include lower occupancy rates, impairments and loan loss reserves, and a decrease in gain on sales of real estate due to fewer dispositions. The company's increased debt and repayment of maturing indebtedness also had an impact on revenue growth or decline. Overall, these factors highlight the complexities involved in managing revenue growth and decline for companies with diverse operations and investments. Net income and profit margins decline. Due to impairment charges, the company's net income has experienced a significant decline, with a decrease of $109.8 million for the 3 months ended September 30, 2025 compared to 2024. And $277.4 million for the 9 months ended September 30, 2025 compared to 2024. This downward trend is also reflected in net income margins, which have decreased from -1% in YTD 2025 to -15.6% in Q3 2025. The primary reason behind this decline is the other-than-temporary impairment charges on lab unconsolidated joint ventures, as well as a decrease in gain on sales of real estate and an increase in interest expense. Additionally, other income expense net has decreased by an unspecified amount. These factors have collectively contributed to a significant decrease in profit margins, indicating a challenging financial period for the company. The company is generating a significant amount of positive operating cash flow. In the 9 months ended September 30, 2025, the net cash provided by operating activities was $957,875,000, representing a substantial increase from the previous year's figure of $786,966,000 in 2024. This indicates that the company is efficiently managing its operations and generating sufficient cash to support its growth and investments. The company's debt level and interest expenses have undergone significant changes. The total debt has increased by $416 million to $9.1 billion at September 30, 2025, with a notable increase in borrowings under the bank line of credit and commercial paper program. Interest expenses have also risen due to various factors, including the issuance of new senior unsecured notes and higher borrowings under the commercial paper program. The weighted average effective interest rates for fixed-rate debt increased to 4.2% as of September 30, 2025. Overall, these changes indicate a substantial increase in the company's financial obligations. Management is optimistic about the company's outlook, focusing on consolidating assets and liabilities through HEALTHPEAK OP. The strategy involves owning and operating high-quality real estate in healthcare, leveraging scale and industry relationships for a competitive advantage. To achieve this, management is increasing investments in real estate through strategic acquisitions and developments while effectively managing debt. The company has made several strategic acquisitions and divestitures in recent years. Notable acquisitions include the integration of Physicians Realty Trust operations, a lab land parcel in Cambridge for $20 million, a portfolio of 3 outpatient medical buildings in New York for $17 million, and condominium interests in Atlanta for $6 million. Additionally, the company was involved in a Callan Ridge JV transaction in 2024. On the other hand, the company has also divested certain assets, including an outpatient medical land parcel for $4 million and 2 outpatient medical buildings for $27 million. These transactions demonstrate the company's efforts to optimize its portfolio and achieve strategic growth through targeted acquisitions and divestitures. The company has demonstrated its commitment to returning value to shareholders through both dividend payments and share buybacks. In 2025, it paid out dividends totaling $637,234 and declared quarterly common stock cash dividends of $0.305 per share. Additionally, the company repurchased shares worth $97,058 in 2025 under various share repurchase programs. These actions indicate a focus on rewarding shareholders through both dividend income and capital appreciation. That concludes the financial summary for HEALTHPEAK Properties Inc. Feel free to comment below, and I will be happy to answer them when possible.